Today we have been meeting the Parliamentary Committee on Finance to share our position on the two bills. One of the bill is the exemption of the Bujagali project. And for us, we are saying that the exemption is not fit for the purpose. Why? Because we anticipated, or it was anticipated, that if we give tax incentives and exemptions to Bujagali, the electricity tariffs will go down. But we have come to realize that even at this time, the tariffs have not gone down. We are still incurring the same tariff rates at commercial level, at home level, at commercial level, at industrial level, and even other areas. So we find that that one is a cost to us because the intention of giving tax incentives and exemption is not yet realized. And what we are saying, we have in our proposal, we are telling the government that they should first, if they cannot remove tax incentives and exemptions, they should do an audit to assess whether the tax incentives and exemptions are giving us a benefit, what we call the cost-benefit analysis, but also to make sure that the tax incentives and exemptions are commensurate to what we intended to benefit from. Because we have come to realize that Uganda as a country, we are giving a lot of tax incentives and exemptions, but these tax incentives and exemptions are not commensurate to the benefits. So we are saying that government should make sure that we are not losing a lot of revenue in incentivizing the companies and any investors that are doing business in Uganda.
But speaking specifically to the Bujagali income tax exemption is that in generality, we noticed that as a country, we've been losing about 2.9 trillion in tax expenditures or tax exemptions every year. And for us, we think that's a lot of money because that's about 12% of the estimated tax collection, for example, in the financial year 2022-23. And we believe we've been generous enough, but also the other fact that in the energy sector, we generate a lot of energy than we consume, and we end up paying over 90 billion every year in deemed energy, or in terms of the energy we produce, but we are not consuming, and this money goes to energy generating companies. So our call today to government is that we think we have done enough exemptions to some of these energy producing companies, and for us, we believe that exemption should be looked into and maybe not awarded, basing on the fact that we are losing a lot as a country. And when you look at our tax to GDP, we are still below. The target was about 17%, but we are still at 13 point something. So we still fall short on all the perimeters of our economic development targets. Then on the issue of undenatured spirits, we were calling on Parliament and government to ensure that most of the local producers are looked into and given more generous tax rates of lower than at least 17%, and they agreed to put it at 15%. So undenatured spirits are raw materials that are used to make things like alcohol, sanitizers, and the rest. So why we think the tax rates should be very low is because these are raw materials that we use to produce. So if you make the tax rate very high, it means the final product is going to really be high. But
two proposals of amendment of the excise duty amendment bill and the income tax amendment bill were brought to Parliament and referred to the Finance Committee. And as Finance Committee, we are engaging stakeholders, Ministry of Finance, and other parties that are privy to these engagements so that we make the process of bringing a report to Parliament about this. We've analyzed the Excise Duty Amendment Bill 2025 and realized it is in the interest of promoting our locally grown raw materials in production of undenatured spirit. And we are happy that when government comes up with alignment of differentiating between the locally manufactured, undenatured spirit that is manufactured using locally provided raw materials should be different from those imported. We know it is promoting our farmers, buy Uganda, build Uganda, as we agreed as government. So The other one is income tax, which is requesting for an exemption extension from June 2024 to June 2025 of exempting Bujagari power, so that as it is put not to cause an increase in tariff of the electricity given to manufacturers and even domestic consumers. So we are processing these reports, and we have asked a detailed report from the Auditor General, since it was referred to them by the Ad hoc Committee of Parliament to give us their findings. When they brought the report, it was indeed reflecting that when we remove the exemption, the tariff will go high. So a number of issues were brought up in the discussion, and the Auditor General has requested to bring us a clarification in writing, which we expect on Monday.